Hello friends, welcome back to Mock Test channel. Today in this video, I am going to cover with you NISM Series 15 Research Analyst Exam important question and answers. These questions have been repeated so many times in the exam that it's sure that when you are going to appear for the exam, you will find many of these questions repeated in your exam as well. So make sure you watch this video till the end. Let's begin with the first question. The focus areas for an analyst while analyzing an economy would be A. Changes in various macroeconomic factors like national income, inflation, interest rate and unemployment rate. B. Flows to the foreign direct investment and foreign portfolio investors. C. Saving and investment patterns. D. All of the above. And the correct answer is, friends, it's all of the above. Going to the next question. SEBI can take which of the following actions against an intermediary? A. Issue a warning or censor. B. Suspend the registration of the intermediary. C. Cancel the registration of the intermediary. D. All of the above. And the correct answer is all of the above. Going to next question. Market capitalization of a company is calculated by A. Book value of the share multiplied by number of shares outstanding. B. Market price of the share multiplied by number of shares outstanding. C. EPS of the share multiplied by number of shares outstanding. D. Face value of the share multiplied by number of shares outstanding. And the correct answer is, friends, market price of the share multiplied by number of shares outstanding gives you the market capitalization of the company. Going to the next question. The PE ratio of a company is 20 and the price of the stock is rupees 340. The company has declared a dividend of rupees 20. Calculate the EPS of the company, that is earning per share of the company has to be calculated. So we'll go to the calculation. PE ratio, as you guys already know, is market price of the stock divided by EPS. So if you take the EPS into the other side of the equation, you will get EPS is equal to market price of the stock divided by PE ratio. Market price of the stock is given in the question, that is 340, divided by PE ratio, that is 20, will give you the answer, that is 17. So the correct answer is rupees 17 is the EPS of the company. Going to the next question. A dash wall policy separates insider areas from the public areas in a firm. Option is given: A. Indian, B. Chinese, C. Berlin, D. Hard Rock. So friends, the correct answer is Chinese wall. So what does a Chinese wall mean? Say if you are working in a corporate company, you will find some of these departments are carrying lot of confidential information. It can be, say, server related information. It can be client related financial data. So all these departments are usually separated from the other people who are working in the same firm. Maybe if there is somebody who is working in the sales, he doesn't know much about what is happening in the server department. So there is a wall policy which is called as Chinese wall policy, which separates the insider areas from the public areas. So the people who are dealing with the public on a regular fashion are separated from the people who have the insider information of the company. Next, the formula for calculating book value per share of a company is A. Net worth of the company divided by number of outstanding shares. B. Net profit divided by equity. C. Equity plus reserves. D. Equity less debts. And the correct answer is net worth of the company divided by number of outstanding shares. Friends, until this point, if you have understood whatever has been taught, please hit on that like button, press on that subscribe button and drop in a comment saying say hi or thank you or okay. This is all to do with the YouTube algorithm so that this video gets recommended to all the viewers who are looking for such a content. Going on to the next question. The current price of a stock is rupees 180 and the last EPS was rupees 10. What will be its price to earning ratio? Options are given, but before we look into the option, let's find out the answer. For finding out price to earning ratio, that is PE ratio, what you have to do is current stock price divided by earning per share. So current stock price is 180 divided by earning per share, that is 10, will give you the answer, that is price to earning ratio in this question is 1/8, that is 18. So option C is the correct answer. Going to the next question. An industry which does not face the threat of new competition coming in would be an attractive industry for investors or owners. State true or false. It's such a simple answer. The answer is true. Because just think, if you are opening up a shop, the biggest threat that you can face is a competitor. What if there is no competition? Then definitely that's going to be very attractive for the investors, because this company or the shop is definitely going to have a great success. Going to the next question, the most important priority for an investor would be A. Capital appreciation, B. Return on capital, C. Safety of capital, D. None of the above. And friends, the correct answer is safety of capital. People in India especially always look for safety of the capital. They don't want to invest in mutual funds and stocks because they feel that it's unsafe. Their capital can have erosion. Whereas they are okay with getting less returns. They are okay with less capital appreciation, but safety of capital is always a priority. Going to the next question, Dash is not a department of Ministry of Affairs. Options are A. Department of Economic Affairs, B. Department of Disinvestment, C. Reserve Bank of India, D. Department of Revenue. Friends, the correct answer is RBI, or the Reserve Bank of India. Reserve Bank of India is not a department under Ministry of Finance. Going to the next question, Dash contains policy measures of the government which deals with government's revenue and expenses. A. Fiscal policy, B. Monetary policy, C. Foreign exchange policy, D. Annual budget. And the correct answer is, friends, fiscal policy. Fiscal policy contains all the policy measures of the government which deals with government revenues and expenses. Going to the next question, the sales of a company is 200% of the operating profit. The net profit is 1/4 of the sales. What is the net profit percentage of the operating profit is the question. The percentage is given. Let's do the calculation. Let's assume that the sales for that company is rupees 100. And what is given in the question is sales are 200% of the operating profit. That is double of the operating profit is the sales. So if we are assuming if sales is 100, so double of the operating profit. So operating profit has to be rupees 50. Then in the question itself, it's given that net profit are 1/4 of the sale. So if you have to calculate the profit, that is 100 is the sales divided by 4 gives you 25. So 25 is the net profit. So in the question, what is asked? Net profit percentage of the operating profit. So net profit is 25 and operating profit is 50. Multiplied by 100 gives you 50%. So that is the correct answer. Net profit percentage of operating profit is 50%. Let's go on to the next question, friends. Some companies perform very well in an industry as compared to others because of their A. Unique way of mitigating risk and maximizing returns, B. Unique value proposition, C. Unique selling points, D. All of the above. And friends, the correct answer is all of the above. Friends, let me give you a piece of information. In www.mocktestchannel.com, you will find all the latest question and answer sets that have been coming in the exam. And it also includes the question and answer that were asked in the last month. So please make sure that you attend all the mock tests that are given in www.mocktestchannel.com so that you gain that confidence of passing this exam in first attempt. Let's go on to the next question. Unhealthy practices in security market includes which of the following? A. Insider trading, B. Disclosure, C. Transparency, D. Surveillance. And the correct answer is, friends, A. Insider trading. Insider trading is a practice where all the information which is to be supposed to be with the top management of a company is leaked outside the organization so that the people can make use of those information to gain profit. Going to the next question, Dash captures the sources and uses of funds in the business over a period of time. A. Balance sheet, B. PL account, C. Income statement, D. Cash flow statement. And the correct answer is cash flow statement. Cash flow statement captures the sources and uses of funds in the business over a period of time. Going to next question, the sales and purchase of new issues of stock happen in A. Primary market, B. Secondary market, C. Money market, D. Currency market. So the correct answer is, friends, primary market. Primary market is where a new issue of stocks happen, that is IPO. Whereas secondary market is where all the old stocks are exchanged between the participants. That is what we see on a day-to-day basis, that is trading, where a stock which is already owned by somebody is being sold to another person via exchange. So that is an example of secondary market. But every new issue of stock that happens is happening in the primary market. Going to the next question, a high PE stock relative to the peer group numbers and market PE is seen as dash stock. A, cheap. B, expensive. C, undervalued. D, low beta. And the correct answer is expensive. So if you have to understand the depth of this question, just read through the questions once more. A high PE ratio relative to peer group members and the market PE is seen as, so price to earning ratio. That means if I have to get the same earning, the amount of price that I have to put in the market is what is reflected by PE ratio. If a PE ratio of one company is 2 and another company is just 1.5, so the one which has a higher PE ratio is always seen as an expensive stock, because I have to put in more money to gain the same profit that is earned by the other company. Moving on to the next question, the formula for calculating dividend payout ratio is option A, dividing the company's dividend per share by earning per share. B, dividing the company's total dividend by net profit. C, dividing the company's EPS by total dividend. D, both 1 and 2. So friends, the correct answer is both 1 and 2. If you are dividing the company's dividend per share by earning per share, basically what you're doing is same as dividing the company's total dividend by net profit, because per share thing will get cancelled and all what you are remaining is total dividend by net profit. Going to the next question, an industry where rivalry is high like aviation and telecom space, the end result will be dash pricing power and dash incomes for the industry participants. The correct answer is, friends, lower. Why it will be lower? Because if you remember the geo time when the telecom space was so much competitive, what was the end result? The pricing of all the services became low and the incomes that they could generate also became low as a result. Going to the next question, company buy back shares dash. A, if it has excess cash and there are lack of profitable investment opportunities. B, when the management thinks that the stock is undervalued. C, to reduce the equity and resultantly increase the leverage in the company. D, all of the above. Friends, the correct answer is all of the above statements are correct. Going to the next question, investment advisors work with investors to help them decide an asset allocation and make a choice of investment based on A, time horizon of the investments. B, assessments of their needs. C, ability to bear risk. D, all of the above. And the correct answer is all of the above. Going to the next question, which of the below mentioned options is true for CAGR? A, CAGR means computed annual growth rate. B, CAGR is calculated as the sum of annual returns over the holding period. C, CAGR does not take into account the timing of the cash flow into account. D, all of the above. So all the above statements about CAGR is correct. Going to the next question, the forecasting of stock prices based on their historical prices is called as A, economic analysis. B, fundamental analysis. C, technical analysis. D, behavioral analysis. And the correct answer is technical analysis. Technical analysis is when you look at the price trend and looking at those trends you make a prediction of how the stock is going to perform in future. Going to the next, Dash is the nodal agency of central government to formulate and monitor India's macroeconomic policies. A, Department of Economic Affairs. B, Department of Revenues. C, Department of Financial Services. D, RBI. Friends, the correct answer is Department of Economic Affairs is the nodal agency of central government to formulate and monitor India's macroeconomic policies. Friends, with this we come to the end of this video. Please make sure you check out the playlist for NISM Series 15 mock test, wherein you will find all the rest of the questions which are repeated in this exam. Also make sure you go through the chapter explanation videos because understanding these concepts are very important to clear this exam in first attempt. Thanks a lot for watching. See you in the next video.